buyers will buy homes at 18% interest. We proved that in the late 70s, to about 1980. It just depends on the price of the property. But they had appreciated so much in these high-end cyclical markets, the ones we don't like where you live and I used to live. Those markets are overvalued dramatically.
Well, this is what we had talked about a little bit earlier. You were talking about maybe some markets needed a little bit of a correction. Maybe we've seen a big gap between wages and what has happened with home prices. So the stat that you can see at the top of this is since 2015, collective wage growth on a national level is up 13% compared to 25% when you combine home price appreciation and inflation. So the problem with do mortgage rates matter? Well, they may in this case because we've seen such a divergence where it's really hard for people to make the payments work given where their current incomes are and where home prices are.
Okay, so I got to stop you here. This is really interesting. You're saying there's a 13% growth in wages since 2015, but what is needed if you take wage growth just price growth of property appreciation, right? That's been a 25% growth since then? Is that what you're saying?
Yes, that's home prices plus inflation.
And what I hate about things like this, just so you know, although it's not going to be that inaccurate because the rates haven't been dramatically different, but I think you need to compare wage growth with mortgage payments, not prices, because nobody buys a house based on a price, hardly ever. They buy it based on a payment. Here, though, since 2015, the rates have gone a little up and down, but they're not like dramatically different. Here it doesn't matter. But folks, if you're looking at home price appreciation from 1980 to now or 1990 to now, and you're saying wages have only done this versus home prices doing that, you would be very misled by something like that because you have to look at the interest rates and factor them in to know what the actual payment impact is, not the overall price, the sticker price of the house, right?
And we don't have this slide here, but we also have affordability. So we have affordability over time, which is exactly to your point. You can look at the 1980s, and that's going to look at the income in the 1980s versus the home price in the 1980s and adding in mortgage rates as well. So we can chart that out, and it shows you the same trend, which I think is just another way of saying it. But it does show that even compared to 5 years ago, 10 years ago, 20 years ago, affordability is clearly the biggest issue for the home building industry and for the housing market in general. The graph, what it's going to show you is just the percent of communities that are taking price cuts. So going back to the idea of a correction, you can see in markets like Dallas, in 2016, you had 20% of all of the actively selling communities doing a price cut, 20%. Now it's almost 35%. So you are starting to see sellers have a certain expectation. The reality is maybe you can sell your home, but you got to do a little bit of a haircut. Okay, and that's what this is capturing.
So this includes the entire market. It doesn't segment by price or home style or anything like that. And what's interesting about this kind of stuff is when you look at new home sales, 10% of the market, as you pointed out earlier, the builders are just not building affordable housing this time around. They're building to the higher end, the higher price point, and when I say that, I don't mean really high end. I just mean, and of course they are doing that, like Toll Brothers, etc. But they're not building cheap bread and butter housing anymore. Whereas before the Great Recession, you saw lots of home builders building $130,000 houses. Now you don't see any of that. And it's been a completely different cycle post-Great Recession in terms of the kind of new home inventory. So when you throw new homes into the mix, that's going to throw the stats off. Or if you're only talking about new homes, it's really going to throw them off, right?
And what I'll add to that is that's been true for pretty much this entire expansion, which is crazy. Right. It's been 10 years that it's been mostly the higher price point. But at least we've been talking about affordability and attainability so long that you do have LGI homes and you have Express Homes for the D.R. Horton division. You have different builders that are finally saying there is a huge part of the market that we can capture at our, the tiny share of the overall. Right. But we've seen that, and we've also seen a shift towards more attached product. Yeah. So we have seen even markets that you wouldn't expect, Columbus, Ohio, for example, that is now seeing a bit more attached product as they're saying, affordability is our number one problem, and this is the best we can do with where land prices are today.